Welcome to this episode of Beyond Distribution with GTDC. Despite the uncertainty of global elections, shifting policies, and layoffs in the tech community, the industry outlook is positive, suggests John Marrett, Director of Financial Risk for the Economist Intelligence Unit. In this episode of Beyond Distribution, he joins host Frank Vitagliano to discuss a variety of factors impacting world and regional markets and IT demand. Merritt will share his expertise on this topic and deeper insight into the Asia-Pacific markets in a keynote discussion at the GTDC Summit in Singapore on November 19th. We hope you enjoyed this episode. Don't forget to rate and review. Thanks for listening.
Hello, everybody, and welcome to our next episode of Beyond Distribution. I am thrilled today to be with John Marrett, Director of Financial Risk at the Economist Intelligence Unit, EIU. John is headquartered in Hong Kong and serves as the lead economist for the EIU in APJ, or for APJ. John, we're really happy to have you today.
Thank you very much, Frank. It's great to be here.
Yeah. So John, tell us a little bit about yourself, how you got into, your role, and what do you like about it? What are some of the challenges? Just give us kind of an overview of that first as we get started.
I've been at the EIU for around 9 years. I've been focused on Asia for most of my time here. I'm now in a global role as Director of Financial Risk, but I'm still based out of Asia. I'm sitting in Hong Kong right now. So it does take a great deal of my time, this region, and I'm very interested in what's happening here for obvious reasons. So financial risk at the EIU is a product that covers the risk of financial crisis, essentially. So that could take various forms. It could be a fiscal crisis of some kind, a sovereign debt default. It could be a currency crisis, a large drop in the value of a currency against the dollar, for instance, or it could be a banking sector crisis. So this is a broad measure that we divide into various stratas that looks at the likelihood of a major upset in any given national economy. And we cover all the regions of the world. We cover over 100 countries with this product. So it's very internationally focused.
Yeah, well, that's great, John. We're excited. As you know, I think we've told you previously, and certainly you're coming out to speak with us. We've expanded our GTDC efforts into APJ. Before we get into specifically APJ, though, let's talk a little bit about just the overall economy. There seems to be some positive indicators as we head into, the fourth quarter of 2024. What's your take on sort of where we stand on the global economy, and then maybe more specifically, maybe comment a little bit about APJ?
It is looking good going into the final quarter of 2024. And that might sound odd, given that the Federal Reserve in the US has just cut interest rates by 50 basis points, 0.5 percentage points, which usually means maybe a slowdown is on the cards. But their game plan is for a soft landing. So no recession, no need for any major further interest rate cuts to offset a downturn. They are just trying to sustain employment at current levels. So I would hold that up as one of the big positives as we head into the last quarter of 2024. That is the US economy. The specifics, well, consumer spending is still strong. Employment is still strong, wobbling a little bit, but generally fine. And that's despite quite a prolonged period of higher interest rates that usually tends to weigh on consumer activity. And we're also seeing a surge in investment in new industries. So a lot of green investment in the US on the back of various incentives provided by the current President Joe Biden's administration, and also investment in new IT technology. So a lot of investment there in AI, and that's all over the news, so I don't need to point that out in detail. But it adds up to a probable increase in productivity coming down the line. And of course, that at the end of the day is the real driver of economic growth. So I'm positive on that front. Less so on other regions. Europe is muddling along. It has some obvious obstacles. The tensions there with Russia, given the war in Ukraine, and the political fragmentation and policy distraction that encompasses is weighing a lot on the region. And we have seen some signs of a more serious slowdown in Germany as well, the largest economy in Europe. So that is worrying also. So things a little less positive there. But elsewhere, Asia still good, despite China's slowdown and the problems there we've got principally in the property market. And Africa, LATAM, they are muddling along better than average, perhaps at the moment. And the reason for that, still high commodity prices. So that keeps a lot of countries ticking along there and a lot of investment flowing.
Yeah, well, that is generally a good story, I guess. You know, the sentiment in the U.S. does appear to be picking up. It appears to be pretty positive post the 50 basis point cut. The reaction has been pretty positive, as you indicated. The one thing we have seen a little bit of, John, in the IT space is some consolidation and a little bit of concern with some layoffs. There's been some companies that have announced layoffs, and it's hard to figure if it's just sort of cost cutting to enable maybe investment, particularly in AI, or if it's a reaction to maybe some, still some overhiring that came out as, in the aftermath of the pandemic. It's hard to figure that out. So that is the one piece in the IT space that, we're starting to see. I'd be interested in your thoughts as it relates to some of the economic factors that you're seeing in Asia that potentially could impact the IT, industry.
Interesting question, Frank. Yeah, well, I mean, let's start with Asia in general. It's an interesting case right now because we have the golden child, the big economy of Asia, China, mired in not a recession, but a clear and obvious downturn. But at the same time, we've got very strong exports coming out of that country, benefiting from the strong Western consumer demand, not least in the US. So how do we fit those two pieces of the puzzle together? And then where do the other countries sort of fit into that schema as well? Well, of course, yeah, we can have booming exports, but not a strong economy overall. It's China standing on one leg, and that leg is exports. So you get quite lopsided growth and the lopsided benefit for various sectors and various segments of the population. But as in the US, China has seen a big wave of high-tech investment tied to the green transition. And with the green transition, that has been going on a lot longer in most respects than what we've seen in the US in the last sort of 3 years. And also strong investment in high-tech IT applications, so services and goods, and those tied particularly to artificial intelligence as well. So I think those are things to watch with China, the big player there. But how about other countries in Asia? Well, we've got various countries in Southeast Asia that are benefiting, sort of secondhand benefits from China's export boom, because we still have tariffs in the US that are affecting what China can ship to that country, but many countries in Southeast Asia, particularly Vietnam, Thailand, Malaysia, and to a limited extent, Indonesia, have benefited from Chinese firms moving production out of their home country to other hubs within the region. So that's a significant pull-up to other economies in Asia.
Yeah, you mentioned the AI investment. That certainly is happening, everywhere, and it really is an interesting journey that we're on. But my sense is it really is a journey, and we're in the very early stages of it, and it'll continue. I was at a conference earlier this week, and there was a lot of discussion about the investments, and I think what's beginning to happen is executives in the IT space are starting to slow down just a little bit to try to figure out what exactly the productivity enhancements are, what exactly the benefits are. And then, of course, we have not seen the resulting requirements in people and process and those types of things happen yet. They're all still sort of playing out. So we got a long way to go, I think, there.
I agree, and yeah, you put that very well. They're not sure of, these executives are perhaps not sure of exactly what the product is that they're investing in, which sounds strange to say, but what is the application for all these new services that you're producing, all this new automated IT that we call AI? And while we can see some really obvious benefits for certain tasks within our daily work, and I can already, I'm sure you can, Frank, as well. What's the broader picture? Like, how much can this really affect productivity growth? How much can this shorten one's working day or free up labor to do other more productive tasks? You tell me, perhaps, because it's your industry, but everyone has an opinion and they're entitled to it. And whether you think it's going to be a quick revolution, it's going to start soon, or it's going to be a forced start and perhaps something to come in the medium to long term, that's a big call for where the global economy is going.
Yeah, we saw that with cloud too, John. Cloud was coming, and the advancements and all of the advantages. We could kind of see them, but they were tough to really figure out ultimately what the real advantages were, and then specifically to put any monetary productivity enhancements to it, just because it took a while to play itself out. I see the same thing here. Well, let me change gears a minute. One of the things that I know you guys focus on and think about is certainly all the elections that are going on all around the world. There was an article recently in Reuters that mentioned that almost half the world's population is going to have an opportunity to vote in 2024 in some sort of an election, which is clearly creating a lot of uncertainty. And obviously, the question becomes, will that have an effect on, economic conditions? So I'd ask you, what are your thoughts there?
Yeah, that's a great observation to start with, I think. And perhaps we should remind ourselves that a big chunk or a big share of that electorate globally is in India as well this year, right? So they've just voted in national elections, and perhaps we can talk in a bit more detail about India itself, but it's a big mover. But if we want to talk generally about elections, then yes, elections, the build up to them, the immediate aftermath, they cause uncertainty almost by definition. And uncertainty from an economic point of view tends to pause spending. So that could mean consumption to a certain extent, but really what we're talking about is investment as businesses and investors wait for a clearer sign of policy to come through under the next government, or the next government to be the one that they bet would come to power. But this is a stop-start pattern, so we shouldn't worry too much about election outcomes per se, or at least at a global level. I think what we need to worry about is the policy that follows. So will the new government slow growth with particular policy priorities, or will that result in investment being redirected out of that country, away from that country to another competitor country with similar industries? Or could it result in a sizable drop in investor confidence in general? If you've got a very, say, populist government and they upturn existing policy. I think for the most part this year, we've had fairly benign outcomes, but we've still got a few to come. We've still got the US election. You might have a view on. Things could change before the end of the year, and we could have a very different picture going into 2025. But from our point of view, and I would like to say that our baseline forecast, based on the work we've done, is that Donald Trump will take the presidency in November. What we're going to see is something that's fairly upsetting to the policy status quo now, but is not unexpected. So I think, the US one will matter a lot and will be probably the most substantial or most affecting election we're going to see this year.
Everybody certainly has an opinion here in the US, and there's a lot of folks that won't share it, don't share it, obviously. So it's really hard to tell. It's sort of hard to get a handle on it. But I think in general, your point about most of the time, there's sort of a benign impact. I think that's important, because I think what a lot of people worry about is, the underlying strength, right, of the economy, the underlying strength of where we are at any given time. And the fact of the matter is, as you indicated earlier, from a US standpoint, all signs are, relatively positive. And, clearly we're talking about, if you look at the rest of the world, one of the things that you mentioned earlier that I think is an ongoing concern to those of us looking from the outside in is what's happening in Europe in terms of the ongoing conflicts, Israel, the Middle East, Ukraine, and, the rising tensions that we tend to see in other parts of the world. What are your thoughts there? I mean, I hate to say, it's kind of like, it almost feels like it's just there and that's a bad feeling.
Yeah, I mean, we could talk for hours on any particular conflict, but I think there's something significant to say about multiple conflicts close to Europe happening at the same time if we want to look at that region. So, of course, we have the Ukraine situation that's ongoing. It's not getting better. We're heading towards probably some sort of stalemate. Let's hope not. But Ukraine needs more firepower. It needs more investment in its military capabilities. And that is quite a burden on Europe at the moment. And then, of course, we have what's happening in the Middle East as well, and the threat there of a wider war, whether or not we call it a war, that could be disruptive, not just in terms of the economies in that region, but also the surrounding economies in the Middle East and their oil and energy production, people flows out of those areas as well, which is already quite an agitating force in Europe. So there are many negatives to read into that situation, and it's not going to get better fast. So that's concerning. But if we're talking about Asia, do you want to also mention Asia? Well, if we're talking about Asia, that's at a distance, right? And by all means, it is affecting Asia, but not as directly, of course, and even not as directly as it would the US. So we've got economic factors to consider. We've got inflation to consider. We've got geopolitical alliances to consider in the medium term, and how that might strain economic relations between certain Western countries and Asian countries. But we've also got the indirect secondary impact of the strain these wars are putting on Europe, and then the subsequent strain that puts on demand in Europe and the effect that can have on Asia as well. So at the moment, the US is doing a lot of the heavy lifting in terms of demand growth for imports. So that's exports out of Asia. Asia remains the factory of the world, let's say, and it really remains heavily reliant on the US as well. So if we did see a situation where the US began to slow substantially, we would be in big trouble. And the wars, conflicts around Europe getting worse, that could really agitate things in a very, very bad way from an economic viewpoint.
You know, it's interesting, John, clearly, as you and EIU and the EIU forecast, right, what's going on and what's going to happen, you've got to factor in all of these things that are kind of out there, right? Whether it's the elections, whether it's the continued conflicts, whether it's rising tensions in, various places. So how do you kind of do that? Like, I mean, do you take a position? Like you mentioned a thought regarding, the U.S. election. I'm assuming in other elections around the globe that matter, you sort of look forward a bit. How do you do that? How do you factor, what factors are you looking at? What are you seeing that kind of gives you an indicator as to what could happen?
Well, that's a big question. Yeah, I mean, that's the basis of our business, really. And we have various different approaches depending on what we're looking at and depending on whether it is the future of the economy or it's the future of what we might say is pure politics, at least in the immediate sense. We have a number of qualitative and quantitative input factors into our models. And if we are talking about politics, of course, we're not always talking about a spreadsheet model, right? But if we're talking about economies, then we are talking about fairly complex models with a lot of analyst input. And I think for us, we put a lot of value in trying to incorporate the politics into the economics. So getting those policy dimensions, how politics translates into policy, and then how that policy translates into economic outcomes. And for you, you would just see the end product, but of course, you would be concerned with not only what you think might or most probably would happen, but alternatives too. I'm sure, and maybe you can give me some examples. You have some scenarios, business strategy scenarios to deal with in your line of work. Do you think about different scenarios and how they might impact your?
Totally, yeah, absolutely, and we factor that in when you do short-term, planning, which I would say is a year, and then longer-term planning, which generally isn't more than 3, somewhere in the 3 phase. And
yeah,
we do and have done, and all the IT companies that I've been associated with over the years do exactly that. Is we try to figure out as best we can. But again, it's it's as good as in many cases it's as good as a guess relative to what could happen. Because I will tell you, and I don't know how it works with elections in the rest of the world, but the news media, at least in the U.S., as it relates to covering the U.S., it depending on who you listen to is how you're going to formulate your opinion, and that that may not be the most effective way to have a forward-looking view of what is going to happen, right? And that was why I was wondering whether there were any special things that you guys look at that kind of
at the risk of your comments turning this into a politicized podcast of some kind, and keep it on the level. Yes, of course. I think the point I was trying to get at is, of course, all businesses and all organizations have some sort of scenarios planning. They have a base case and they have some alternative scenarios, and of course we approach it the same way. And you call it a guess about the future, and from our perspective, it would be a very well-educated guess with a lot of a lot of techniques and models and various factors plugged in to give our guesswork a better chance of succeeding. But at the end of the day, any company or firm who comes to us, they don't want to know just about one baseline case. They want to know, okay, perhaps if it goes this way, fine. But what if it goes the other way? So what's the most likely alternative option?
Right.
And what would that mean for my business? So it's really about mapping out different scenarios, giving those different probabilities, and then explaining in clear terms what could happen in that baseline and those alternatives.
Yeah, and why, right? And then what are the factors? So good. Well, John, just kind of wrapping up a little bit, we're really pleased that you've agreed to speak at our first GTDC Summit coming up in Singapore, November 19th. And what are some of the key points that you plan to talk about? Just a quick preview, because we'll obviously show this. We'll release this podcast prior to that event. And so it'd be good to give just kind of a little bit of a little bit of a view of what you're going to be talking about.
Sure, Frank. So apart from a general state of play, what's happening globally and then regionally, I also want to look at what's happening with trade, in particular in the region. So what's going to be happening with tariffs, industrial policy in that area, and what this means for Asia in terms of its growth, in terms of its development into or out of certain sectors and industries, and what that means for what Asia will look like in 5 or 6 years' time. What will this region look like? What will these countries look like? Because 5 years ago, these countries looked quite different, pre-pandemic, and 5 years before that, they were very different structurally as well. So, what can we expect? Where's the end destination for the main countries, the countries to watch in Asia? But I want to throw the question back at you as well, and I want to ask. This is fairly new territory for you, your specific organization, but what are you most concerned about in Asia? What are you looking at more often in Asia?
Yeah, I think well, let me start with the positives and the reason that we decided to expand. Our group, GTDC, is a nonprofit trade association that works with the big global distributors throughout the world. And the distributors is about 25 distributors that are part of our organization, and they represent about almost $200 billion of IT products and services that get delivered, and many of them are big global entities with locations all around the world, right? And then of course there are the smaller ones that are located specifically in Asia or in Europe or in North America in some cases. And so for us, it was important that we expand, and our members were encouraging us to do that. And we work very closely with all the vendors in the world, the OEMs. And of course, these are all global entities. And so for us, it was very important to be able to have a global footprint. Now, the not the concerns, but the things that we think about is there's certainly a ton of diversity, and there's a lot of nuances associated with the various locations. You mentioned earlier, when we think about China, we think about Japan, when we think about India, Australia, New Zealand, and then Southeast Asia. And so from our standpoint, it's really trying to get a handle on and understand how we can be most effective. One of the things that we did is we hired a pretty seasoned senior executive from the IT space, Annette Lazarus, who I know you've met, and Annette will lead our efforts, in that area. But look, you can't even think about or talk about being a global entity and not participate, very significantly in APJ. So we're excited about it, and we're really looking forward to pulling this summit meeting that we've got scheduled together. And I think what you mentioned and what you indicated you were going to talk about will be very well received, because I think folks will be very interested in, the EIU's view on, certainly globally, but also more specifically, what you think about APJ and where it's going and what's going to happen. So I'm excited. I think it's going to be a great opportunity for both of us.
I agree. Of course, I agree. But I think that marries up well with my plan for the presentation. And as I said before, earlier in this discussion, Asia is still really the factory of the world, if we want to generalize there, its place in the world economy. And what is that place now, and how is it changing? It's not just a factory anymore. It's also a big consumer of goods as well. And how is that factory being buffeted by various tensions with other countries, and how are supply chains morphing around those tensions as well? And those are all themes I'm going to cover on the day. So I look forward to it.
Yeah, so do I. So, John, thank you very much for your time. We're looking forward to seeing you at the APJ Summit in Singapore. And thank you very much. Appreciate it.